Quick, what pops into your head when I say the term real estate investing? Do you think of deadbeat tenants, leaky roofs, clogged toilets, and other things that you have no time for as you work a busy career? Or do you live in a place where the booming high-tech industry has really shot up property values, and so all you can think of are expensive properties, high mortgage payments, and negative cash flow? If you're like most people, your image of a real estate investor is probably somebody that owns one or two properties, self-manages them while barely breaking even, as they manage tenants and toilets at all hours, barely hanging on by their fingernails, just to hold on until the property appreciates in 20 years and it makes it all worth it. Am I right? If so, I'm here to tell you, it doesn't have to be that way. Not anymore. This is not your mom and pop's rental market any longer. In this video, I'm going to do a deep dive into a new investing paradigm, turnkey investing. Keep watching, and I'll show how you can build your own portfolio of cash-flowing rental properties just like the Wall Street hedge funds do, and manage them passively while still collecting cash flow that rises over time with inflation. I'm Jim Bevins, a 30-year engineering veteran that pivoted my retirement to real estate, where I bought 6 rental properties in 3 different states in a span of just 15 months. I'm here to show you how I did it and how you can too. So let's dive in with the most pressing basic question, okay? What the hell is a turnkey provider? So here's the deal. Turnkey providers are real estate investors themselves, okay? They are using the classic fix and flip rehab strategy. So they were running their business, buying crappy homes for pennies on the dollar. They had marketing systems in place to find motivated sellers. They had negotiators that would work out good deals, and were regularly buying crappy homes and then sending a rehab crew out and then rehabbing it over a period of 30 to 60 days and then selling it at retail price to homeowners. Okay? This has been done for decades, right? This is the classic fix and flip strategy of real estate, and people have been making money in this for a long, long time. So what happened was in 2008, these businesses were still operating. They were still buying houses, they were still fixing them up, but they still needed to sell them, and there were no homeowners that could buy, right? Think back to what it was like in 2007 and 2008. Credit dried up. Nobody had any equity. Nobody had any credit. The credit markets were frozen. Nobody could buy a house. So these companies were rehabbing their homes and running their business, and they weren't able to sell the inventory. And meanwhile, while this was all happening, rents actually stayed fairly steady through the 2008 financial crisis because people still needed a place to live. Well, with prices dropping massively and rents staying fairly steady, the discount on cash flow became very, very hard to ignore for investors. And so those investors who did have capital, they went and got into some of these markets and bought some of these houses. And some of these businesses saw this and was like, oh, this is a way I can sell my inventory that I'm fixing up and need to flip and get rid of. And so they pivoted their marketing. Instead of putting it on the MLS and listing it and looking for homeowners to buy it, they started marketing to investors. As part of that, not only were they selling them, but of course, as an investor, these investors weren't local. They lived elsewhere. And so it's not like they could buy a property and manage it. So what a lot of these businesses did is they started their own property management arm, their little own property management division inside the business. And so not only were they fixing and flipping properties, but now they would sell them and they would manage them and do ongoing maintenance. And of course, property management involves screening for tenants and taking rental applications and placing a tenant. So once they did this, then they could go to investors, and they made a great pitch. They said, buy a house from us. You, as an investor, you will get a freshly rehabbed property that cash flows on day one, and it will have a tenant already in it, and it will be professionally managed with management already in place. And it was literally a true turnkey experience. And that was the birth of the turnkey provider. And so this was in those few years following 2008 that investors started really pouring in, and these companies started scaling up their operations. Now, what really kicked into overdrive is eventually Wall Street took notice, specifically Wall Street hedge funds. And they approached some of these bigger outfits and they said, hey, we want to buy 500 houses this year. Can you make that happen? We want to buy 1,000 homes over the next 3 years. Can you do that for us? And some of these companies, they took up the call. They said, yeah, I think we can do that. And so they scaled up their operations even more. They scaled up multiple rehab crews. They staffed up their property management. So that is how Wall Street started getting involved. And that's where we are today. The neat thing about this from our perspective is that there is nothing preventing anybody else from plugging in and contacting these companies and saying, hey, can you send me your email list of what properties you have available to buy, right? Because these companies, they're not run by Wall Street or anything. They're their own companies, their own entities, and they have inventory to sell like any other business. And so if it's a hedge fund, if it's an individual investor, it doesn't really matter. They'll sell to anybody. So it's relatively easy to get plugged into this infrastructure. Now, the interesting thing is that since rates spiked, then the Wall Street interest, the hedge fund interest, has declined quite a bit. You know, they were buying like gangbusters during COVID when rates were super low and, you know, everybody was buying real estate. It was, you know, that's when I was buying my properties and it was so hard to buy properties. But now they've kind of backed off because interest rates are higher. And that's made the sellers of these properties actually kind of motivated because they are still, you know, they're still cranking out inventory. They still have properties to sell. And some of the turnkey providers, you know, when rates first spiked in like 2022, then I saw, you know, as I got weekly emails from some of these turnkey providers, and I saw that their inventory list was growing every week. And before long, they started offering incentives. And that's what you're seeing today is that there's lots of turnkey providers out there that are offering incentives like, we will waive the property management fee for the first year or sometimes even the first 2 years. Or they will credit you like up to 2% of the closing costs, which is the maximum that a seller can pay in an investment property. So they'll credit you back 2% and you can use that to like pay your mortgage broker to buy down the rate. Some are doing bulk rate buy downs of like every property, you know, they're working with a preferred lender. So if you use this lender that they have this deal with, and they are doing a bulk rate of just, you know, buying down the rate, and you can actually get a decent rate still in some of these cases. So it's made it with the higher rates that are out there right now, it's actually made it a really, really attractive time to buy for individual investors. And the neat thing is that, again, there's a large volume of properties being pumped out in this methodology by these turnkey providers. But as an individual investor, we don't need a lot. I mean, you know, just 10 houses can transform the financial future of one family. And I mean, some of these turnkey providers, they are offering 10 turnkey houses per month, right? So there's a lot of options and a lot of choice. And it's wild how little known this methodology is. And that's a big reason that I started this channel, is to get the word out. So, you know, to let people know that this is here. Now, to be clear, turnkey investing is a true investment of capital. There is no magic bullet here. There is no creative financing. This is not a no money down scenario. This is not something that you're going to go and create cash. You're not going to flip a house and get rich quick. Any of that. None of that is there. Because, you know, keep in mind, we are getting a conventional loan and we're putting 20% down of our own investment capital. That's usually going to be, you know, in the anywhere from 35 to 55,000 range, somewhere in there. So This requires capital. And that's a big reason that you may have not heard about this. It's not like everybody does this. It's not like everybody has 40 or 50 grand just lying around ready to put into a property and ready to do it again and again. Because honestly, that's where the real power of this methodology comes into play, is when you're able to scale a portfolio. And if you have one house that cash flows 300 a month, that that will grow over time. Think of what will happen if you have 10 houses that started at 300 per month and grows over time. That's financial strategies that really move the needle. Okay, so what we're looking at here is a real life turnkey property. Okay, this is from my inbox that I just received like less than a week ago, just last week. So I'm not going to go into a deep dive here. In a future video, I'll talk all about analysis and running the numbers, but I just wanted to highlight for you what the numbers kind of look like. Of like, in this case, this is an example. This is selling for $129.9. It's renting for $11.95 per month. For those that are familiar with the 1% rule, you can see this is very close to hitting the 1% rule. One thing to note is that the property taxes, $650. This is per year. Okay. I don't know about you, but in my home state in Oregon, I probably pay close to this per month in taxes. So just to get you an idea, and there are properties like this all across the Midwest and the South. The other thing to point out is the interest rate here is it's only 5.875%. Now this is very low. This particular turnkey provider, this is their incentive that they're running. They have worked out a special deal with one of their preferred lenders where they are doing bulk rate buy downs. And so if you buy from this turnkey provider and you use their preferred lender, you can get a lower rate. And so those, I mentioned the incentives earlier, and this is an example of one. I don't actually use the turnkey provider's financial analysis. I plug all these numbers into my own analysis. In fact, let me do that real quick just to flash up like what the cash flow looks like. Okay, so I just want to flash this up here real quick. Again, I'm not going to dive into the numbers. There's a whole nother video I'm going to do about property analysis and how to do that. But again, just to point out, real quick, the price, $129.9, we're putting in 25% down payment, which is fairly common. You end up getting quite a bit lower rate if you put 25% down instead of 20. So it usually works out better to do that these days in this current rate environment. The interest rate, and here's our mortgage payment. And you can see, subtract that from the $11.95 rent. You can see that we subtract the property taxes and insurance that it gave, and then the 9% property management fee. And this is our total fixed expenses along with the mortgage. You can see that this first cash flow number it's $369. I call this the raw cash flow, or maybe gross cash flow, or it's basically cash flow after fixed expenses. But of course, we do want to model variable expenses, so things like vacancy and maintenance. And so here I'm accounting for 5% for both, and so we take off another $120, and we're left with the what I call the average cash on cash return over 1 to 2 years. That's because these vacancy and maintenance expenses, they don't happen in equal amounts, right? They're very bursty. You might have a broken window 1 month and then, nothing for months after that. So you just kind of take an average of that. And so that's what you can think of as this number. So 250. And you can see that, again, this is just to illustrate. I just want to show this is a real life example. There's properties like this available all over the South and Midwest that can get you positive cash flow after you pay all your expenses, and after you even account for variable expenses, you're still coming out ahead a couple $100 a month. This particular deal, this is a fantastic deal, and I don't think I pointed it out, but this is actually a 4-bedroom. This is one of those situations where, man, if I had capital, I would totally buy this. But I don't. I'm fully invested, and that's a big reason why I started this channel, is to to put the word out, because I see deals like this come into my inbox all the time, and I can't do anything with them. So I'd rather share them and help people break into this methodology, because it really is a huge game changer. So The cash on cash return is nearly 8%. And honestly, I typically see anywhere between 5 to 7%. Like 5% is the minimum I shoot for. So yeah, this is a very, very good deal. I would totally buy this if I could. So, and you can see that the raw cash on cash is, over the 10% threshold. So, okay, that is all I wanted to do there. I just wanted to flash these numbers up. This calculator also calculates things like appreciation, mortgage paydown, the tax savings. I'll get into all that in a future video. In fact, you can, just to give a sneak peek, you can kind of see here that I model like rent increases in future years. And you can see that, if you put in an assumption for like how much the rent increases every year, you can see how it impacts the cash flow. And because our mortgage payment stays fixed, then any little rent increase goes right to our bottom line. And so that's reflected here of just even a 3% rent increase, in 8 years, we'll have almost doubled our cash flow. So that's the power of inflation, and when inflation is working for you instead of against you. So that's another big aspect of this. So I could talk all day about this stuff, but I'm going to try to stay focused on this video here and finish telling you about this overall methodology. Okay, so that is what turnkey investing is all about. I wanted to just kind of run through some numbers, show you what the deal is. So again, this investment methodology is not for people who have bad credit or no capital. So who is it for? Well, clearly it's for people that have money. And so it's six-figure earners. Particularly, it's ideal for tech professionals. And that is really kind of how I started showing people how to do this, because we receive these RSUs and these bonuses and these lump sums. And in fact, I started my coaching business, Cashflow Engineers, helping my former coworkers, showing them how to do this and how to get started. And because that's a class of people that have resources. It's the thing about this methodology is it takes money but no time. And that's what we have. We have money, but we don't have time. And so that's why this real estate investment methodology is so perfect for engineers and high-tech professionals. In fact, if you think about RSUs, remember RSU is a part ownership in a company. And I like to go back to Rich Dad, Poor Dad. If you've ever read Rich Dad, Poor Dad by Robert Kiyosaki, remember his big framework was you start a business, you grow the business, and then you use the income and the proceeds from that business to invest in real estate. So it's combining the B and the I quadrant, right? So you become a business owner, and then you use that to become an investor. And then the investment gives you passive income, and then you reach financial freedom when your passive income exceeds your expenses. Well, this is kind of a variation of that, because if you remember, RSUs is a part ownership in a company. So we are being given ownership in a company. And what we are able to do is we can leverage that ownership and trade some of it in for investments that cash flow and give us passive income. And so that's why I harp on the RSUs a lot, because it's a perfect use of that and gives you a way to utilize Kiyosaki's framework of achieving financial freedom. And we can get there a lot sooner than you might think. There's a video I'm planning to kind of run the numbers of like, okay, if you bought X number of houses per year, how soon could you replace your salary? So there's some really fun thought exercises that you can do with this, and I'm gonna go into in a future video. Another scenario that this investing methodology works really well with is if somebody owns like 1 or 2 rental properties in their local area that has a lot of equity, but it isn't doing much for them. I mean, maybe they're cash flowing, maybe it's and maybe it's a house that you moved out of, and you rented out when you moved out. And over time, it's probably cash flowing now. It's probably giving you something, but if you've owned it for the last 5 years, there's probably a lot of equity, and yet you're probably not getting a lot of cash flow from that equity. And so that whole return on equity concept is a big plus. It's a big advantage of this investing methodology, because you can turn that equity into a whole bunch of cash flowing rentals. And so the best example is one of my students in Cashflow Engineers. His name's Suda. When he came in, he had 2 rental properties in Oregon. One of them he bought way back in 2005. So he'd owned it for like 20 years. never took out another mortgage. So the mortgage payment was very low. He was cash flowing like $1,000 a month on this property, but it had like $500,000 in equity, right? Well, once he joined and I helped him get his feet wet and he bought a couple turnkey properties and saw how easy it was, he went all in. He sold that Oregon home and he did a 1031 exchange. And a 1031 exchange allows you to sell a property and then invest the proceeds without paying taxes, as long as you reinvest it in the same type of asset. And so he sold one rental home, took the $500,000, and over the course of months, ended up buying 13 rental properties in out-of-state markets. And those 13 properties cash flow nearly $4,000 per month after fixed expenses. So he nearly quadrupled his cash flow through this one property that he sold. So that's another scenario that works really well of, if you have had a property that that you're self-managing, that you've owned for a while, it's got a lot of equity, it's not doing much for you, you can really leverage that and to really boost up your cash flow and your leverage. Because now the other thing is that, all the advantages that Suda has now, he spread out his risk. He went from one door to 13, so his risk is way spread out now. He's re-leveraged. So now every little bit of property appreciation is going to benefit him. And then think about the cash flow growth. He is now up. I'll tell you, the last update he gave me, he's at 17 houses total, and he's about to get his 18th. He's working on closing his 18th here soon. 18 properties. Just think, if only half of those properties raise their rent just $50 per year. Maybe they each raise their rent every 2 years, say, and so you get half of them every year. That's $450 a month boost in cash flow, because remember, all the mortgages are fixed. So in 10 years, that $4,000 per month cash flow could be turning into $8,500, right? $450 per year increase. So I know that he works at a company. They recently went through a round of layoffs, and I'm thinking, do you think he's worrying about layoffs? I don't think he's worrying about layoffs. He's in such a good position because of his portfolio, and that's what I want to enable people to do. People in the tech profession, and that's is really what I'm passionate about, is getting the word out about this methodology. Okay, so the third group of people that I want to call out, I already said that, this methodology works great for tech professionals, engineers, the like. If you work for a big tech employer and get lots of RSUs, this is perfect for you. If you own one or two properties and with a lot of equity that isn't doing much for you, this is a way you can re-leverage that equity and really put it to work for you. The third group of people that I want to call out that I've seen this work really well for are Indian nationals that have immigrated to the U.S. It's kind of a byproduct of, I was sharing this with coworkers in the tech industry, and there's a lot of people from India in the tech industry, obviously. But, I've come to learn that real estate investing is fairly common in India among a portion of the population. And so there's just a familiarity and a comfort level with real estate investing, more so than I see in my American brethren. So about 80%, I would say, about 8 out of 10 people that have come into my programs and that I've helped teach this to are from India. And so there's just an openness and acceptance of it that I found, and there's probably all sorts of reasons for that, but it's just something that I want to call out because they are also the people that have had the most success. They've jumped in and just I know what I'm doing here, and have shopped for properties and called up turnkey providers and done all the work and built a portfolio. So it really is something that I just kind of want to call in when I ask the question, who is this for? If you're from India and you've invested in real estate before in other countries, but you've always wanted to know how to do it in America, this is the investing methodology for you. you are a perfect person that this is for. So yeah, if you are a tech professional, if you own some rental properties now that you want to look into re-leveraging and putting to more work for you, if you are an Indian national here in America and you want to, if you got properties in other countries and you want to get started here in the US, if you're in any of those groups, or if any of this sounds intriguing for any reason, I do have a link to a free training in the description of this video. And so you can go and check that out, and I'll actually go, the framework of like how you actually can, get on these lists and get access to these properties. So feel free to check that out at any time. But I also know that after getting introduced to this investing methodology, there are a lot of you out there who will have doubts and questions and concerns and a healthy dose of skepticism around this. Like, is this for real? If that's you, and by the way, I don't blame you at all. I was the same way. I mean, don't get me wrong. I had to convince myself of a lot before I jumped in. So if that is you as well, then keep watching, because I love breaking down the misconceptions and myths about this investing methodology and this picture. We all have this picture of, remember when I first asked you in this video, what do you think of the term, what do you think when I say the term real estate investing? And we all have a picture come into our mind, and you can blow away that picture because there's nothing like it. And I love painting the picture of what it really is like, and that's what I'm going to do in future videos. Okay, so that's about it for this video, all right? And, now that you know about turnkey investing, it begs a question. Could you really do this? Could you really buy a property thousands of miles away and have somebody else manage it for you? If that sounds risky or scary, then keep watching. Watch my next video, because I am going to break down why buying an out-of-state property is actually less risky and easier than buying a property locally. Okay, so stick around. You won't want to miss it.